Coke, Apple, Microsoft, Tesla, Google, Nvidia, Verizon, ExxonMobil, I can go on and on. What do they all have in common? They use the accrual basis of accounting. I'm going to explain why all publicly traded companies are using the accrual basis of accounting, why smaller companies do as well, what it entails, and even go over an example. Woo! As always around here, if you could do me a favor, hit that subscribe button down below, and when we meet in person, I might even buy you a coffee. So what is the accrual basis of accounting? The accrual basis of accounting is not the only method of accounting, but it is the method of accounting used in bookkeeping that records financial events based on occurrences rather than cash transactions. So this method allows for a much clearer picture and reflection of a company's financial health by recognizing revenues and expenses when they're earned or incurred rather than when cash transactions happen. So let's take a look at an example. If a business provides services in December but doesn't receive payment until January, the revenue would be recorded in December under the accrual basis of accounting. Similarly, if a company purchases goods in one accounting period but pays for them in the next, the expense would be recorded when the goods are received, not necessarily when the payment is made. So this is generally accepted as a standard practice for larger businesses and publicly traded companies because it provides such a comprehensive view of the company's financial position. Now, while it may be more complex than the cash basis of accounting, the accrual basis is so widely used because of how accurate the financial statements are projected. So that leads us to the benefits and drawbacks on the accrual basis of accounting. The accrual basis of accounting is a commonly used method that records financial transactions when they're incurred rather than when the financial exchange takes place. So one significant benefit of this method, it provides a much more accurate picture of a company's financial health because it takes into account receivables and payables. This also means that revenues and expenses are matched and reported for the period in which they are earned or incurred, regardless of when the money is received or paid. This leads to much more accurate financial statements, aiding in reliable forecasting and strategic planning for businesses. But that's not to say accrual accounting isn't without its drawbacks. It can be more complex and time-consuming. A lot of that's due to the necessity of tracking those payables and receivables. You might even need to engage a CPA or a CPA firm, which is going to cost you more money. Whoa! There's another thing I want to highlight as well, and that's distorted cash flow information. So income can be reported even if cash has not been received. That makes it difficult to ascertain the actual cash on hand, potentially leading to cash flow problems. Yikes! So for those small businesses, this means a less reliable cash flow. Cash basis accounting might actually be appropriate for smaller businesses. It provides an accurate and immediate view of cash on hand. This is something I touched on in my cash basis accounting video, something I highly recommend you watch if you haven't already. So therefore, the appropriateness of the accrual basis of accounting depends on specific business context and needs. So why is the accrual basis so widely adopted? The accrual basis is liked by so many companies. Wait, did I say liked? I meant to say please hit that like button down below.
Wow, thank you.
The accrual method is widely adopted due to several key advantages it offers, particularly when it comes to presenting a more accurate and comprehensive picture of a company's financial health. It records revenues and expenses when they're earned or incurred, regardless of when the money changes hands, as I mentioned before. So as a result, it can provide clear and accurate representation of actual financial performance, leading to more informative and reliable financial statements. Additionally, the accrual basis is compliant with generally accepted accounting principles, GAAP. I'm sure you've heard of it. And an assumption if you're preparing the financial statements under IFRS, International Financial Reporting Standards, making it the required accounting method for most businesses, like those large companies I mentioned. It also provides a better match between revenues and expenses, and it allows for trend analysis over fiscal periods. The method also assists in prediction of cash flow and planning business strategies. more effectively by presenting future obligations and expected earnings. So despite the complexities involved, the benefits it provides in terms of accuracy, compliance with standards, predictability, and transparency make the accrual basis the preferred choice for businesses around the globe. As such, the accrual basis of accounting is not just widely adopted, but it's also heavily recommended. To really get a good understanding of the accrual basis, let's take a look at an example. Consider a company called Super Snow Removal that takes a contract on November 1st to move snow for $30,000. As per the terms of the agreement, the payment is to be made on completion, which in this case is February 1st of next year. According to the cash basis of accounting, the company would record revenue only on February 1st when the cash is physically delivered. However, under the accrual basis, Super Snow Removal would divide that $30,000, the total revenue, over the work period and record a portion of it each month. So November, December, and January, they would record $10,000 each, even if the cash payment won't be received in full till February. The accrual basis, it gives a much more accurate picture of the firm's profitability and the financial health during the specific period. This method, it's crucial for businesses that deal with credit transactions and long-term contracts, but it also can make financial tracking more complicated. Okay, so here's what you need to do next. Even though you have a really good understanding of accrual accounting now, there's two things I would recommend to check out from here. Go and check out the video on cash basis accounting so you can fully understand how cash accounting is different. Then be sure to watch the cash versus accrual accounting video where I compare and contrast the two methods. Do me a favor, share this video and my channel with one of your accounting friends, and I'll see you soon.